Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be going and covering M1 Finance. We're going to be doing some trades. I'm going to try and make about 3 to 5 trades today on Monday, the 14th of January. Now, I have about $115.38 that I normally invest every Monday, plus I have $4.63 of dividends. I'm going to be rolling that into some stocks that have X dividends coming up. That way I'm able to compound my new capital, my dividends that have been paid out in this past week by Altria back into my portfolio, capture some more dividends that are going X dividends that are already part of my portfolio. So that is what we're going to be doing. So if you are brand new to my channel, hit the subscribe button below, hit the thumbs up. If you do enjoy the content, find it helpful, share the video, and of course if you have any comments, questions going over the video, drop it in the comment section, and I will always read and reply to all your guys' comments. And let's go ahead and get into it. Okay, now I've jumped over to my M1 Finance portfolio. Now from here, I want to go ahead and use my spreadsheet to find out which one of my stocks are actually going X dividend here towards the remaining part of January or maybe into February. I may find some stocks that are actually going X dividend here towards the end of January, but I may actually be positive in those positions, and I don't really want to be reinvesting my capital in dividends right now. We're in a pretty suppressed market right now, so there's a lot of positions that I'm currently negative in, and I want to be buying up those stocks right now while they're already offering a nice discount versus reinvested into stocks that are positive. And I may need to add equity into them to increase my position, but I don't want to be increasing my unit cost average or decreasing my yield on cost. So what we want to do here, while we have M1 Finance up, we want to just, if you have your own spreadsheet here, I have one available over on my website. It has most of what I share here, but I did add a couple more columns and information as far as what I like to track for my own stock market portfolio. Now, I currently have this sorted here by how long the company has been growing their dividend here, but I want to be looking and searching for stocks that are going X dividend here towards the end of January here. So I'm going to go ahead and just sort this by stocks that are going X dividend. And here, column 17 is the one, so Jpmorgan and a few others. So I'm just going to go ahead and load these companies up here on my other tab, and then we'll kind of go through them all together here. So let's go ahead and load these stocks up, and then we'll cover each individually. Okay, so number one, we had Jpmorgan. It actually doesn't have an X dividend here coming up. It looks like it may have already went X dividend. So here towards the bottom, let's go ahead and zoom this in. So towards the bottom, we can see it already went X dividend on the 3rd of January. So it wouldn't be one I wanted to be reinvested into right now. Anyways, I'm not really investing in the financials right now. Cisco Communications, there's no X dividend. So again, this one probably already went X dividend here in January. So we look January 3rd, this one's already gone X dividend. Let's continue on. We have Caterpillar. I know right off the bat that my position over on M1 Finance, whoops, that's my app I'm making. On M1 Finance, my position in Caterpillar, I'm down right now 14.81%, but I used to be down some 25%. So this is actually a good position to be adding in. That is going X dividend here fairly soon. I'm negative in that position. That could be one that I'd be lowering my unit cost average, increasing my unit on cost, plus Caterpillar here. It has been growing and paying out dividends for the past 8 years, so it's not a super safe company as far as, recession proof. If we look at its dividend history here towards the bottom, let's see what happened. 2010, so let's look at 2010 real quick on the chart. What happened in 2010? So all they did here, between 2008, they used to pay 42 cents per share. During that depression that took place back in 2008, all they did was freeze out that dividend. They froze it at 42 cents until 2010. So Caterpillar, as a long-term investing play, it's a great growth company. It has some growth potential in there. Plus, it has been growing its dividend. There was a period there where it froze its dividend at 42 cents, but still, if you're still receiving dividends through a downturn, you're buying back more shares of that company during the downturn, and after they recover from the downturn, they just kind of pick it back up, then that is still considered a safe play there. So Caterpillar is one of those I'm going to go ahead and mark as one of the options I'm going to be added into here on Monday. Moving on to General Mills. General Mills, it already went ex-dividend here. This is one that I've been adding to my position. So it went ex-dividend here on the 9th, which I believe was Wednesday this last week. So it was Wednesday. And plus, right now, currently, General Mills is actually positive now. General Mills, I've been buying that one up. It's up nearly 10% from when I started purchasing this company. So it's still not at the target percentage that I want it to be, but it is one of those positions. I will wait to see where it kind of adjusts. I'll have more time to add more capital into that, and hopefully we have some sort of an opportunity to kind of buy into it in the future. Next, so I'm going to go ahead and X out of General Mills because it's already gone ex-dividend. AT&T, that's another one here that's going ex-dividend here in January. This one's already gone ex-dividend. Again, it went ex-dividend here on Wednesday, so I don't want to invest in this one. AbbVie. AbbVie is one that was on my 5 stocks going ex-dividend next week. It made it through the whole the screening process. This was actually going ex-dividend on the 14th, which is already Monday. I would have needed to buy this stock, more of this stock on Friday or prior. So all my shares that I currently hold will be eligible for those dividend payments in the future. But if I were to buy something right now on Monday, it wouldn't be eligible for what I purchased on Monday. I wouldn't be getting those stocks paid out to me inside of my portfolio. So it's really not worth. I'll leave it on the list for right now. I may be able to buy it at a depressed point because on the ex-dividend date, the stock loses X amount, however much is getting paid out. That's how much has dropped out of the price. So I may be able to buy some more shares there. ABM is another one. This one's ran up quite nicely here just within the last couple weeks. This one's already gone ex-dividend earlier this month. We have Lowe's. Lowe's is going ex-dividend towards the end of the month. So here we have another position. I'm pretty sure I'm positive in this one too. So if we move over and take a look here at Lowe's. Lowe's, yeah, I'm up in the position nearly 7.5%. So I don't really want to be added into that one either. So that kind of leaves me with Caterpillar and AbbVie. So maybe now I have to go and drop into stocks that are going ex-dividend here in February. So now I have to load up all my February stocks. And here we have Apple. I know I want more shares of Apple right now. SPG, Pfizer, let's see, Lockheed Martin, Southern Company. We have Edison International. I believe I'm down in that position. Johnson & Johnson, that one's a buy right now. We have Triple M. That's another one here within the portfolio. And there we are. Okay, so we bring up Apple. Apple, I know I am down in that position. I believe I'm good. I'm down a good little portion here. So if we look at Apple, I'm down 16% in that position. That would be a great time to be buying more of this one. SPG, I'm up in that position just slightly, not something I want to add to, so I'm going to go ahead and get rid of it. Pfizer, I'm up in that position as well, so I'm not going to be adding any more shares to Pfizer. Plus, I believe I'm already at my my target cap of what I want to invest into Pfizer right now. So I'm going to go ahead and close out of that one. Lockheed Martin, that one, let's see if I'm positive or negative. Lockheed Martin, I'm negative 15%, so Lockheed Martin will be a good one. Southern Company, I am currently up in the position slightly. I'll go ahead and knock that one off. Edison International, if we look at Edison International, let's go ahead and check out ED. Where are you? That Edison International, I'm down slightly in that position. And then Johnson & Johnson, if we look at Johnson & Johnson here on the list, we should be, I believe, negative. So we are negative 7%. So we have Apple, Lockheed Martin, Johnson & Johnson, Triple M, Caterpillar, and AbbVie. So I'm not going to be added into AbbVie. That is not going ex-dividend right now. But I do have Apple, 1, 2, 3, 4, 5, 6. So if I were to knock out one of these, let's see, which one is offering the lowest dividend yield would be Apple. But it is a great buying opportunity right now. Okay, so now we got to the spot where now I found 6 stocks I want to be added into in my portfolio here in the future. I already hold them. The reason I am adding into these positions is because I already believe in the company. I'm already invested in the company. I don't really have to look at their current financials. I'm invested for them for the long term. but I am taking advantage of their current dip. I'm taking advantage of their upcoming ex-dividend to buy more of these shares with my equity being invested. I'm going to be lowering my unit cost average. I'm going to be increasing my unit on cost, my yield on cost. I'm going to be increasing my future dividend payouts. So what I am going to be doing is now looking at the target of, let's go ahead and sort these by position. So Apple, 4.3 out of 5, so that one's okay. I could be invested in that one. I'm not overweight. Lockheed Martin, that one's currently 3.9 out of 3, so that one's a little bit overweight. I'm going to drag that one to my right, so that one's on my overweight side. Edison International, it should be ED. I am not overweight in that one. That one I'm still wanting to add more position to. Johnson & Johnson, I'm still wanting to add more position to. Triple M, let's go ahead and look for Triple M, should be here. Up towards the top because it uses the numbers there, so I'm not overweight in that position. And then Caterpillar is my last and final stock, and I'm slightly, so 3.9 in Caterpillar, and Caterpillar offers a 2.6, whereas Lockheed Martin offers a 3.17. So I'm going to just go ahead and knock off Caterpillar. So my 5 stocks I'm going to be buying here on Monday are Apple, Edison International, Johnson & Johnson, Triple M, and Lockheed Martin. So those are my 5 stocks. So what I'm going to be doing here now is taking my $115.38, adding my current cash on hand of $120.01 divided by 5, because I'm going to be buying in the 5 stocks, and it's going to be $24 in each one. So let's go ahead and move into these first ones. So I'm going to go ahead and select Triple M. So the first one I'm going to be buying into is Triple M. I'm going to go ahead and select it, click buy, put in $24, and confirm, Okay, that is done. Next, we're going to go ahead and move back to the portfolio. We're going to go ahead and select Apple. Go ahead and select buy. And $24, continue and confirm. And then we're going to go ahead and select Edison International. Let's go ahead and select Edison International and buy into this one as well. $24 and continue and confirm. And then we have Lockheed Martin. Let's go ahead and select Lockheed Martin here. Lockheed Martin. So this one was one of my ones here I'm overweight in, but it does offer a slightly higher dividend yield. So I'm going to go ahead and invest in this one. I'm already invested. Lockheed Martin is not a bad company right now. It's in a great position. So that one is my 4th. And then my last and final one is Johnson & Johnson here. Johnson & Johnson. Where is it? I just saw it. Johnson & Johnson. Okay, so I have done $24 4 times right now. And, whoops, 24 plus 24. So I'm at $96 currently. And $115.38 plus 463. So I need minus 96. $24 and 1 penny. 1 penny in here. 1 penny. $24.01. And that should give me total orders of 115. Oh, I gotta go ahead and continue and confirm. And there we go. If we go check out our estimated, this is going to show us that we're buying $4.65 of stock, but we've actually selected, let's go ahead and bring the calculator, $24 plus 24 plus 24 plus 24 plus 24.01 is $120.01, which is our $115.38, plus our current capital of $4.63 sitting in the portfolio for a total of $120.01. So those are the 5 stocks I am going to be adding and buying into my portfolio that are going ex-dividend here in the future. By adding to those positions will have their unit cost average decrease. We'll be increasing my yield on cost for the total portfolio, will be increasing my total future dividends that are going to get paid out. Again, these are going to be going ex-dividend, which means I'll be earning those dividends, and then those dividends will get paid out to my account. And then next week, I'll do this whole same process of what stocks are going ex-dividend in the next week, and then buying into those stocks and making sure that I'm invested in the companies that I'm currently, my actual equity percentage is below target. Now, I only invested in the one company right now where my equity percentage was slightly higher than my target percentage, but at the same time, it is a great company. That was Lockheed Martin, and has really good future potential, good dividend payout. You know what? It's offering a 3.17% dividend yield, a low payout ratio of 51.1%, and dividend growth there for the past 16 years. So those are the 5 stocks I am buying this coming week. What are your guys' stocks that you guys are buying? If you guys want to share those in the description below, go ahead and drop them in there. And of course, if you did enjoy the video, hit that thumbs up button below, subscribe to the channel, and of course, if you have any comments, questions going over the video, personal finance, stock market, let me know in the comment section below. And that is it. Thank you all for tuning in. I will see you next time. Have a great day. Bye.